All right, welcome back everyone to the Financial Summit Network. We are back for our weekly show with Mark Wood. Mark, how are you doing today? Bitcoin has been kind of steady over the last since we last saw you, and would love to get your opinion on everything.
I'm doing great. Had a little adventure in over the weekend, back in Maryland again, and I'm actually there are some things there's some things to look at with Bitcoin. I'm kind of expecting it to pop out of this range possibly today. It's trying to make a drop to the downside, but there's something interesting on Ethereum that might be a canary in the coal mine we can take a look at. But
All right. Well, before you go live, we did do a show around the 10 a.m. reversal this morning. The 10 a.m. reversal this morning did not work, but if you look at what happened a little bit later, uh, I mean, there was a little bit of a reversal. Bitcoin is now pulling back down again. The S&P had a beautiful reversal 15 minutes after we ended the show. The S&P dropped, had a massive 5-minute candle to the downside, and then rallied like crazy. As I was saying on this morning stream, the S&P rallied 46 points. It's incredible what happened. I was trying to time the 10 a.m. reversal, and the real reversal happened at 10:35. The 10 a.m. reversal failed, but the 30 minutes later, at 10:35, the market rebounded like crazy. Bitcoin tried to follow suit, but didn't go as far. As I was saying this morning, I did expect us to rebound. I didn't expect us to go down all day. But what's happening with Ethereum? Let me open that up here. And Ethereum is on a weekly MRI buy. And I said this morning I expect a bit of a dead cat bounce, but I'm certainly expecting Ethereum to go significantly lower. All right, and on this note, I'm gonna hand it off to you. I didn't even talk about the weekly charts this morning, but that's okay. I'll do it on tomorrow's show.
yeah, or we can check into that. We can check into that now. But let me get my screen shared, and we can go from there. So first of all, let's just start with seeing where we are post halving. And I'm gonna try to zoom in more. I'm having issues with my mouse. It's connecting and disconnecting. I don't know why. I'm gonna try just a more on-brand battery, but I don't have them right now. But we are about 110, 112 days after the halving. Let's go back. Let's go back to the prior halving and see how many days it was before we started seeing Bitcoin really take a move. So here's the halving. I would consider kind of taking out these highs in August above 12K as where we can see Bitcoin started to make that move. So post halving, that was 150 days. So we still have some time. We're not seeing anything out of the ordinary. Let's go back to the 2016 halving. I would consider the move above this prior all-time high, which there's a nice big candle right here in December 2016 at around $750. Let's see how long that took post halving. That was right around 168 days. So again, we're still in a period where we probably should consider that the price is going to consolidate and stay kind of sideways for a while. This halving took off pretty quickly. This was only about 2, 4, 6, 8 weeks or so before it took out these prior highs. So here we are, day 156, or 112. So let's time this out. Let's just take an estimation. Let's just go to like 160, kind of 160, 150, 165. This puts us in October 2024. It's early October. Now, that makes sense to me because I've experienced that in the election years, the markets really don't start moving until late October into early November. So seeing, we might get it, we might get a run up or more sideways. I don't know, but I'm still not expecting anything significantly powerful until early October or maybe early November, right after the election. Any thoughts on just that general cycle timing tone?
No, I tend to agree with that. That's what we've been saying all year, actually.
Yeah, right. So let's take a look real quick. You and I have been talking about Japan and its uh, debt to GDP ratio, which is ridiculous, right? So here we have the Japanese yen versus the dollar. It's still just very clearly held this key support that we looked at the last stream that was back in April 1990 and has bounced into these horizontal levels of resistance that go back to 1998. So currently there was a spike up and now it's being held down by this clear horizontal here. But we haven't seen a higher high yet. Here it would need 0.0071 to start printing a higher high, and we don't really even have a higher low yet to see if this is going to reverse. I'm looking at the monthly chart currently. So it's stabilized. I guess that's the best thing to say is it's stabilized. And if we look at it in reverse, we'll see that the dollar is kind of, I could draw a horizontal from this area looks pretty good. Either here or here. I like this one because of this support here. So we can see that the dollar is trying to find support, and it has been printing higher lows and higher highs. So it's clearly in an uptrend versus the yen, but everything is stabilized. All of that nonsense that happened a couple of Sundays has settled down, and I don't think it's having any direct impact in the markets as we see them right now.
What
So
do you, Mark, what have you heard on, is is it over or it's just getting started? So I'm of the belief that what happened with the Japan and the Japanese yen carry trade, to me, this is very similar to what happened when the Fed started raising interest rates too quickly and three banks got blown up. Okay. Remember that whole debacle with I already forgot which banks. It was Silicon Valley Bank and the other ones. And I felt that the Fed started raising rates too late, like it always does, and this time it started raising rates too quickly, unlike what happened back in 2000, where they started raising rates too late as always, but they started raising rates very, very slowly. And and they blew up those banks, and then the Fed stopped raising rates, and then everyone thought this is going to be contagion, all the banks in America will collapse, and then everything went okay. Where some people thought this was the beginning of the financial collapse, some people, I thought it was going to end immediately, and I have the same feeling here, where I think this whole thing is already over, and the worst is by far over. Now, I'm being told privately that it hasn't even gotten started yet.
I've
And
heard that. I've heard that
some
too.
people think that the Fed is now forced to raise rates in order to prop up the Japanese yen carry trade.
I've
And I don't believe
read
that.
that.
I still believe that the Fed will lower the rate even if it starts to escalate the Japanese yen carry trade, but I don't think that it will. If the Fed lowers the rate by a quarter or even 50 basis points, I don't think it endangers the Japanese yen carry trade. In fact, it should rally the stock market higher, thus keeping people in their speculative trades after they borrowed money in Japanese yen. What is your view on Japan? I don't know how much you focus on this. What is your overall take on what's going to happen? And I think the Japanese yen will continue to devalue, and the high for the Japanese yen is in. But what are your thoughts?
Well, I can see how you're coming from to that conclusion because, like, look, let's just look at the dollar versus the yen. Once this horizontal, I could let me just add a couple more. I'll add one here, and I will add one more here, just a little bit higher. Let's just say about right here. Okay. Once this is 174 right here, is taken out and the dollar begins to trend against the yen, look, the next real level of any kind of horizontal resistance is at 223, which would be from there up to that level of resistance. We're looking at a 30% move, which would add validity to what you're saying. That
Correct.
yes. So this this whole area right now where everything is make or break. The dollar is either going to get resisted in these levels, drop below this 144 and come back down, or it's just going to slowly grind up, and then we will see the yen starting to weaken significantly. And I don't know how that will affect the US markets, but I also agree with you that I don't think the Federal Reserve is going to raise the rates. We are planting firmly above 4% unemployment. And we'll take a look at the yield curve because I was watching that too. It kind of crashed again. In fact, there's something I want to ask you about on that. I saw a spike and I don't understand what I was seeing. So I think for now it's stabilized. I think that's probably the most conservative, safest thing we can say is that flash crash that took place a couple Sundays ago got taken care of. The market's recovered, and we're just kind of sitting in normal market conditions right now. One thing I did want to point out, just from a chart pattern standpoint, is I had put this target right here in a long time ago. Well, not a long time ago, in April, because I was seeing this as an inverted head and shoulder, right? And so we can just kind of show people. I know a lot of our watchers, a lot of our viewers have been following you a long time, and you cover this all the time. We can kind of make this one a big one, but this was pretty clear to me. I could
Oh
have
yeah.
even I could even draw the breakout. I could move this up here. I could do that, but I like this. Again, I like to stay conservative with these ideas because this, if I moved it up here, this would actually make this a much higher target. But the way that I see this having already played out is I would consider this the target reached. But this is how I got this horizontal is
Yeah, that's what I would do.
I took this trend line from here down to here, down to the bottom. I mean, it's very subjective. You can go absolute high to low to get the most accurate reading. And then we just tag that onto where the breakout against this took place. So this is pulling the measured move target is going to pull this way well above this open air area of resistance. It very likely is going to pull it above here. And if I actually moved it up to here, because we can see there was a lot of activity around this breakout where it broke out, came back and tested that area as support, and then has moved up again. That would actually give us a slightly larger target up to um 230. Well, let's see where that is. 240, about 240, which then this brings us right into this area of horizontal resistance where there was a lot of activity back in 1982. But what we have to realize, look at this pattern. This is a pattern that was 20 years in the making, right? So this could take years to play out. I'm not saying that this is going to go up, but this is, I think, supporting your argument, Tone, that over time, the yen is going to continue to lose value against the dollar, and the dollar is going to strengthen probably back up into this 200 and even down here. I think 200 up to 240 is not unreasonable over time. And that this entire analysis, I think, would be voided if the dollar dropped back down below 130. Let's just call it these swing lows, 126. Taking out these swing lows right here that were set in January 2023 would probably void this inverted head and shoulders pattern. But man, it looks really clean to me. What do you think, Tone?
I don't look, anything's possible, but I don't think that will happen. So I think that the low for the Japanese yen is in, and I think you see because
Well,
the
that's what I'm saying.
Japanese yen trade.
That's what I'm saying is that the low for the yen is in, and oh,
No,
you
I'm
think,
sorry. The high for the yen is in. The one
yeah,
last week is in.
which means that this would trade inverse, and that which means that the low is in for the dollar, right?
Correct. Yeah. So
Yeah.
I think the dollar is going to strengthen against the yen. That does not seem to be the consensus view on this, right? People are still very scared of what happened. So let me just reiterate what happened here. When the Japanese yen is weakening against the dollar, and it's very cheap to borrow Japanese yen, foreign investors show up. Let's say a US hedge fund shows up in Japan, maybe not literally, but or literally. They borrow Japanese yen at a very cheap interest rate. They convert that yen loan into US dollars. They then use those dollars to purchase speculative assets like the stock market. We're just going to use the stock market as an example. So as the stock market is rising, 5-10% a year, what happens to their loan in Japanese yen? Well, if the interest rate stays low and the Japanese yen devalues against the dollar, they have nothing to worry about. But what happened was the Japanese yen suddenly appreciated, and it didn't even appreciate that much. And the Japan raised interest rates from like negative or almost zero to about 1% or whatever it is now. So not that substantial, but it was substantial enough for people to panic, sell their speculative assets, thus crashing the stock market. And this doesn't have to be foreign investors either, right? This could be domestic investors that are doing it and using the Japanese yen loans to buy Japanese stocks. But the stock market crashes, the interest rate rises, the yen appreciates against the dollar, and suddenly these speculative positions in the stock market, whether they're in America or in Japan, need to be sold, money converted back into the Japanese yen to pay back the loan that suddenly has a much higher interest rate. So if the Japan raises interest rates more and the yen appreciates against the dollar more, a lot more of this is going to happen. Now, I personally do not see that happening. I don't see the Japanese interest rate going up much higher. And I don't see the yen appreciating against the dollar all that much. And I think the stock market is still the best place to park your money. And I don't think this is going to be that big of a deal. Now, this has been going on for a long, long time, and we're talking trillions of dollars in this trade. So a 1% interest rate on trillions of dollars is actually a lot of money.
Well, I don't think the rates were raised even that much. I think it was only 25 points, a quarter point. And that sent everything into a tailspin. Um, so what happens when Japan is in a situation where maybe they start to see significant inflation and they have no choice but to start to hike rates above a quarter point? That is when we could see some turmoil. And let me ask you this, Tone. The reason that I started paying attention to Japan was after the amount of money that the US printed in 2020. And I believe that Japan is showing the US how far they can push the printing of the money supply without completely breaking the system. And what we're learning and what this is telling me is that the US can continue to print tens of trillions of dollars over time. With that, of course, they'll have to balance inflation. They printed too much too fast in 2020, which is why we've seen this spike in inflation. But I'm curious to get your opinion on how you think Japan has managed to keep interest rates at zero for so many years while printing a fair amount of yen without seeing a significant rise in inflation. How do you think they've been able to do that? Because I don't know. I haven't done enough research on that to.
Demographics. Okay, so you just said they may have to raise the rate if inflation ticks up, but inflation is not ticking up. Japan can't give houses away. There are literally, you can go to Japan, you can buy a house that would cost you $1 million in Vancouver or Australia or other places, other countries I wouldn't even go visit anymore. And in Japan, you can buy a house equivalent to that house for like $30,000 or $40,000. They can't give them away. Okay, it's a very aging society. It's a very homogeneous society. It's the opposite of Europe and their migrant crisis, right? People can't become Japanese citizens. There's no one is rushing in there to buy these houses either, right? So I'm not expecting massive inflation in Japan. I'm just not. And their currency, I am expecting it to continue to devalue because it always. I spent all morning trying to figure out what the Japanese debt to GDP is, and before everyone says their answer, it's actually not easy. I can't find a single source that actually tells me how the 260 to 70 percent GDP is calculated because I can't back out that number. I can't prove it. I can prove the number I'm getting is 218. 200 Japan's debt to GDP is 218%. I don't know where the global consensus is getting the 265% number from. If somebody can prove it to me, great. Show me where that number came from. Not just don't just show me the number, right? There's 100 articles that says this is the number, right? But how did they get that number? Like show me the debt divided by show me the debt and the source of that debt divided by the GDP and the source of that GDP. I can't back that number, but it doesn't matter. It doesn't matter. It's I think that I think the worst is over. I really do, but I could be proven wrong.
That was a really good point about demographics, because basically what you're saying is that there isn't enough demand to drive up the prices. So which is keeping inflation intact or at bay. That's a really solid point. And I have read that. I've read that Japan, they're having a declining population and their population is getting older. That does make a lot of sense. So real quick, and then we can get off of this. So I showed the inverse head and shoulder on the USD versus the yen, suggesting it's going to trend higher. And we can see the opposite here. We can see this sweeping head and shoulders pattern, which what Tone is suggesting, if our chart pattern analysis is accurate, that means that, well, currently we can see this is a monthly chart. We've got we had a high in 2021 and a massive low in 2022, a lower high, a lower low, a lower high, and a lower low. And we've just printed another lower high so far, with 16 days left in this month. So this is a downtrend. The yen is clearly in a monthly downtrend versus the dollar, which Tone is suggesting it's going to remain in that downtrend. And I'm not disagreeing with you at all. It's very possible this right here was the high, this spike, which was a lower high, which means we could perhaps anticipate a drop to this horizontal. What I will be paying attention to is what happens when the yen loses this support, because I do think some shit will hit the fan when that happens. I don't know how or why or how it will affect the US markets, but that is going to make a big shift once this is a 0.006 level. Because at that point, the yen is going to go to new lows versus the dollar. Like it's going to drop below this 1986 level. So let's see. We'll check in on this and see how we don't even need moving averages or Fibonacci's or anything. This is just so clean. With just using straight horizontals, and we can see them being respected in here. So really quick, I think I'm on my election cycles. Let me find the S&P real quick. We have one thing that has taken place a little bit out of the ordinary is we've seen a top so far. Now we're looking at, we've got 16 days. Let me zoom this in real quick, just to what we're seeing currently. So here was a top. I think the top was confirmed. If I put the 8 EMA on, I would put money that it was tested. Yep, there it is. Because when I get a confirmed month, when I get a confirmed top on a time frame, it doesn't matter what it is. Significantly high probability that the 8 EMA is going to get tested within the next few candles. So that test came. This is a really strong reaction so far, off of this, but it's a bit of an anomaly for the stock market to top in July of an election year. My analysis that we covered several weeks ago says it actually typically takes place in August or September. Here's the 2020 election, and we had a top in February, and then we had COVID, and then we had the pre-election top in September. This top, I guess we could argue this kind of topped in July and consolidated all the way into the election. But again, there was one more top of a higher high right here in August, right before the election. And if we look, we test this early October, early November, buy the dip. Doesn't matter who the president is, just buy the dip in November. It's not financial advice. It's just a pattern I've seen over and over again. Now, here we are in the 2012 election, and we topped in September. We saw S&P topped in September, sideways consolidation, buy the dip in early November. After the election, off to the races we go. So it's not always like that, because this election, this was still navigating off of the 08 crash. So Obama, the early part of Obama's election so you could have still done very well. It would have been scary as hell. But if you had just bought the S&P right here at 805, and now actually here's, if I take off the drawings, here's the wick at 747. So right here whipped all of these longers out. Right here, this candle and then this wick. Anyone who took that risk probably was stopped out. But had you just stuck with the basic analysis of buy the S&P after the election, right here, you would have been in a long that you probably would still be in at this point. So if I put the drawings back on, I was kind of surprised to see this spike, and a lot of it did have to do with what was going on in Japan at that time, um, to put this spike in July. But I think what we will see is sideways into the election. We might see this high taken out in September, perhaps, and then maybe another drop into the election. But I'm not seeing anything out of the ordinary pre-election except for this early high. And the Bitcoin, on the other hand, typically will see a high in August. So right now, this high was put in very, very early in March. Here we are in August. So from prior analysis of elections, I would be surprised to see Bitcoin higher than 70K before the election. Being said, it is in this broadening pattern, and I believe that once 63 or 64K is taken out, Bitcoin is going to go to a new all-time high very quickly, and then probably do 100K past that. And we'll take a look at that in a minute. Let's talk really quick about gold, because gold is just doing its own thing. So gold has printed, well, basically kind of has a triple top right here. And if I put my drawings on, oh, this isn't the one. This isn't the one I had. I wonder if I have it on GC1. No. Okay. So right here, we can see these little areas of resistance right there. And now there's a triple top right here going back the next 3 weeks, but it just continues to print higher highs in an uptrend, printing new all-time highs. Let's see what the monthly candle looks like. Still early in the candle. What do you think, Tone? Would that be, if this candle ends like this, are you considering that a potential top for a while?
Looking at this chart,
Where are we on the MRI? So here was the MRI top. We took out this high. So I would imagine this will print a green star. This would print a green star once this high is taken out, correct?
right. I'm very bullish that chart. I know we don't have a green star right now, but
It's very
to
bullish.
me this chart is very bullish, setting up for a second consecutive MRI top.
I agree. And I see this right here as something that I call a bullish inverted head and shoulders pattern, because I have other drawings on here. So let me take off the MRI. So here's the left shoulder over here. Here's the head. On the right side, we have higher high closes right here and a higher low than the left side. To me, when I see that in something that looks like a inverted head and shoulders pattern, that is mega bullish, mega bullish. And as soon as this, let me see if I have a horizontal. Okay, as soon as these highs right here were taken out, and then this was taken out, these swing highs at 2067, gold was gone. Like this long consolidation, and I think this is what's going to happen with Bitcoin. We've kind of talked about this four top fractal that we've been looking at, which let's just call this right here 70,000 for Bitcoin. I think we're going to see Bitcoin do exactly what gold did once 70,000 is breached for the last time. What do you think about that, Tone?
No, I agree. I mean, look, I honestly think gold will. I think gold's going higher. My target on gold is 3,000, and it'll get reached if not this year, then next year. I don't see gold ever going below 2000 again. The US dollar just devalues against these assets at this point. This is a classic breakout. I mean, this is what it's exactly what I've been waiting for to break that, elusive all-time high. Now, Bitcoin is still the more interesting asset, but I don't expect I'm expecting gold to keep going up.
Okay, so where the heck? Um, I'll show you what I was looking at with with Ethereum. I'm gonna take off the moving averages. So I'm on the 4 hour chart right now. I think I had maybe drawn this on hourly. Yeah, I had drawn it on hourly. I was looking at this last night, and I kind of sent a couple messages out saying, hey, by the end of this day, so this is this is a this is a decently clear and clean ascending triangle, although it's not perfect. I would have liked to have seen a little bit higher highs right here to touch this horizontal, but I've adjusted this trend line today to as conservative as I possibly can. I'm catching every single one of these wicks right here. And look at the reaction ETH has seen in the last few hours off of this trend line. We had a fake breakout right here. This triangle resolves by the 16th of August. So basically tomorrow. So these ascending, first of all, let me ask you, do you agree that this is close enough to an ascending triangle to consider it as possible? Or
Yeah.
yeah, okay.
Yeah, look, I can see Ethereum, popping up because it's on a weekly MRI buy. So
Right.
that's very possible, but this is just an hourly chart. Like when you zoom out, I mean Ethereum is gonna go down and significantly.
Well, you're probably right about that, but the measured move, let me make sure I did this right. Oh,
Yeah.
the measured move, if this plays out to the full move, is we'll take these highs and these lows and we'll just tag it on to the breakout area, and it's about 25%. If it plays out, to the measured move. Now, in the grand scheme of things, let's see where that 25% brings it on the weekly. That is still a lower high. It would have to take out, it would need a 30% move to print a higher high on the weekly. So Ethereum would need 3561. But the reason that I'm bringing this up is because it's possible that Ethereum might be kind of the canary in the coal mine to say, hey, the crypto market might be getting ready for a bit of a pop. And if that happens, I think Bitcoin will follow. And Bitcoin is in a bit of a massive triangle pattern as well. Let's see. There, that have it here. Okay, right here. So again, I'm going to go on hourly, and this is just a giant consolidation. That's all that I'm seeing it as. And for the current information we have, this is as conservative as I can draw this trend line. Now, with a little bit more information, I can very easily bring this down here, and I will when it's telling me to do so. But all that I was expecting today is some volatility, a little bit of volatility coming from the crypto market, because we're coming to the ends of these triangles. And a pattern like this is basically just an odd symmetrical triangle. It's 50-50 as far as direction goes. It is more likely to break to the size, to the to the direction in which it was formed, which is down. But and this is very, very common for Bitcoin, very common to get to the end of a triangle, break down or break up, trap bears and bulls. Like all kinds of people are getting whipped around here. And usually we don't see resolution on something like this until after the triangle is is fully formed. So we've got F in this ascending triangle suggesting the 16th is when we might see a move. And we've got Bitcoin coming to the end of this triangle, which resolves around the 15th. And I would not be surprised to see a little bit of a bounce back up in here, still nebulous. If F does move, I do think Bitcoin will move. And really quick, this is the thing I've been watching, basically the only thing I've been watching for the past several days is 12-hour right here. So we got this spike above the mid Bollinger Band right here. And we have several closes. We got a nice test that you love to see that reaction off the band, and still couldn't print higher highs on this side. Even if this wick here at around 61.9 had been taken out, I would already be looking at 63.2. But still printing kind of lower highs. And now we've got the mid band curled up strong. So you're wanting to see this hold as support. I would be considering this as a dip opportunity today, perhaps. And it would kind of be easy to manage if you were trading, because you would just set your stops like maybe below these swing lows here, or maybe here. And then I would look for this to open up. There's one thing happening on daily that's telling me not to get too bearish right now. And if I don't need all that, I just need the 21. So now I've talked about this in other streams. When the yellow 21 crosses above the mid Bollinger Band, that's telling us we are gaining some momentum back on the time frame. Okay, so this cross is probably going to happen today on the close, and at that point I would look to the 55, which has already been tested a few times up here at 62.3. So the problem is this: currently this candle is sitting below the 8 EMA. We might get a close below it in 7 hours. If we get 2 or 3 closes below it, that absolutely begins to open up these lows here, down at 53K. So this area at around 59,700 is very important on the daily chart. And I would imagine if we look at other time frames, we probably could see it. So let me show you what just a really zoomed out. Let's take a look at the weekly. To me, the weekly is really clear. So the price bounced off of the 55 EMA. And if I put the 50 EMA on, or the 50 SMA on, we'll probably see it get close to that. Yeah. So here we are on the weekly. Remember, EMA above SMA of the same denomination is bullish. This is good. We want that. We like this reaction off of the 50s. We like this bounce, but we can see the price has bounced right into this weekly moving average resistance. Now, it's looking pretty likely that the 8 EMA is going to cross below the 21, and that gets a little bit concerning. So basically, the weekly is telling us we need to see the price above, let's just call it 62,000, before we consider getting any kind of bullish. But right now, I'm not seeing anything mega bearish at all. We're looking for closes above these moving averages. And let me ask you this, Tone, at what price do you consider this low of 50K being high probability of being in and start to get bullish?
64.
64. Okay. And we can take a look at that. Let's take a look real quick at Consensio. So here we are on the weekly, and Consensio is basically saying we're out. Unless you took a risk and bought this dip, which the 2-week said maybe that was a good idea. Front running anywhere down to 47K was a buy. And but on weekly, we're out. We're waiting for 62K according to this. And let's take a look at the 4-day chart. 4-day chart aligns closer with tone. And I like this. I like to try to find the most conservative price target to form a strong opinion. So I'm gonna agree with you 100%, Tone. Until we see 4-day candles closing back above $64,000. Currently, this moving average is flattening out. It's not rolling over, which is good. And we get this moving average curling back up. We're going to look for the price to take out these highs. And if I go back to this chart here, I'm still seeing Bitcoin in this very bullish descending channel pattern. Print them up, pull them up. There it is, right here. So with this look on the weekly, if this week closes this candle above 58.5, now we're going to have the second consecutive close on the 4-day channel. I'm sorry, this is 4-day chart. Next candle closes in 1 day. The second close above 58.5 gets 2 consecutive. Give me 1 more, and now we're gonna reset the MRI and maybe have a chance on a green 2 to try to tackle this yellow moving average at 62.6. Once we start seeing the price above 62.6, 63, 64K, I'm going to start looking for 1 more move right up here around $69,000. And I believe that this time, if the price does not roll over back down here and just continues to grind it out, I believe this time is going to break out. Agree or disagree?
I have to disagree,
Really?
only because um, I don't like breakouts off of new lows. So I would expect a rejection 1 more time in
Okay.
68, 69 zone, a
Okay.
pullback to actually use the moving average as a support, which I
Yep.
thought was going to happen, a few weeks ago, and then breakout. So
Okay.
I'm
Then
not expecting a breakout without a back test to 64.
you just convinced me of that, because with this pattern, which I'm still considering to be basically a descending broadening wedge. With this pattern, what we do look for is, once you get close to a breakout, is 1 partial decline. And I was thinking slash hoping this was going to be the partial decline.
Yes, me too.
Yeah. And then we would see this breakout happening. So what Tone is suggesting, and I do tend to agree with him on this now, is a move up to 68K is still going to frustrate people. It's going to be a lower high. And what we're going to want to see is somewhere between this 68K and 63K, 64K support.
Right.
And then we will have a third higher low,
Because
which,
if it doesn't hold, right, we're gonna get another lower low, right? This is
yeah,
the
yeah, yeah, I agree. I agree. But still, so all of this is still suggesting what we started talking about at the beginning of the stream, which is we still have about 40 days post halving to consider any kind of strength in Bitcoin. So that gives plenty of time to explore this area up here, maybe make a partial decline. And here is the election. Let's see. Let's put a vertical in for the election. Uh, right here. What? So we're still looking at. I'm just gonna put this down here just to kind of keep track of it. We're still looking at about 90 days, 3 months before the election. So I'm still anticipating a lot of boring, frustrating, sideways chop and consolidation. But this next tag of the upper line is going to be interesting. And if anywhere in here between 62 and let's call it right around this area of horizontal at 65 holds that drop moving forward, like let's say right here, the price is if I extend this trend line into the election, let's say we get a tag of 67K and then a drop down to 63 after the election, boom. I'll be very, very bullish. So one thing I wanted to talk about just real quickly is just show people.
Can you extend, oh, before you go,
Oh, go ahead.
if you can find that tab, can you extend the downward sloping trend line into the election?
Yeah.
Right. So if let's say we go up and hit the upper trend line, say early next month, do we
Okay.
have enough room to go back down and make a new low?
Um, yeah, it would have to be a massively strong drop because you're talking about a drop that would have to be like let's say early September. Well, let's just say it goes up here in early September. To touch this prior to the election would have to be another 30% correction or more.
So let me add something here, right? So what I think is the most likely path, I don't know if you can draw like the zigzag. Well, what I think is the most likely path is a rise into the upper trend line, a
Okay.
rejection at the upper trend line. Yep,
So
a rise
around let's
into
say
the
let's
upper
say we
trend
get
line.
a little
Keep
rejection
going, keep
here.
no 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 into the right. A pullback down to the new moving averages at 64, go back to the upper trend line and break out.
Right like this.
That, right.
Okay.
However, if you delete that, and now go into the upper trend line, not too fast, but yeah, into the upper trend line, take it all the way down into the election to the lower trend line.
All right, we'd have a
No,
top
all the way
here,
down. Yep, yep,
top there, and then once
all the way down. Yep,
below there,
yep,
crash. COVID
right,
COVID crash
right. What is that? 44?
44.
Right. From there, I still expect us to go straight up and break out, right? So from here, if this happens, it will be more like COVID recovery. If you get enough of these crashes to demoralize people, there is no back test. So from there, if you draw another line,
So hold on, let's see. Right there, we're at a 35% uh
right,
35% drop into the election.
right, but it's not only the 35% drop, it's also like what a 10-month, 11-month downtrend, a
Yeah,
mini bear market,
yeah.
right? So if this is to happen, you grab another like ziggly line.
Want me to erase this one?
No, leave it. Grab another one and start where the other one ended. Nope, not there. Start where it ended. And
Mm-hmm.
now you go up and to the right and keep going and keep going
Go
and keep
up.
going.
There we go.
Yeah.
There. There we
Yep.
go. There.
Yep.
There
And
we go.
more and
There. And then
more and more and more and break out. There will
yeah.
not be a 10 to 15% correction. I think if they happen, they'll be like on a 2-day basis. And then break out to 100K right away.
Yes, and another way to say that is I believe that as soon as this descending channel, this descending trend line is breached, and let's just be really conservative and say we get 4, 5, 6 4-day candles closed above this, it's gone. 100K, 120K is where I'm looking. This trend line is going to be important to follow into this election cycle. So we will keep an eye on that for sure. And so let me go real quick. I just wanted to show people, I've noticed that the mempool fees are super low. They're four sats per VB, and they've been like that for a couple of days. So if anyone is not familiar with Sparrow Wallet, take some time to do some reading and research on Sparrow Wallet, because it's one of the easiest way to consolidate transactions and get rid of some dust that might really impact you years down the road when these fees are never going to be 3 sats again. There's some really great tutorials online for Sparrow Wallet, but have you ever used Sparrow, Tone?
No.
Yeah, it's phenomenal. Craig Raw is the developer, and it's open source. He's very transparent about what's going on. Just be careful, because it's really difficult to find their real Telegram channel. Do not get scammed if you're trying to get customer support. I think on Craig Raw's Twitter page is where you can get that Telegram link, but please be careful on that if you're going to check into that. So, and I have done a transaction consolidation. I had a bunch of small transactions, probably just from moving some tests off of exchanges, or created 4 or 5, 6 small transactions, and it's very easy to combine them into one. And the time to do that is when it's very cheap to work with Bitcoin. So one thing I wanted to talk about really quick, Tone, is, well, hold on a second. Let me take a look here. So we were talking about Nvidia on the last stream, and remember we were watching this weekly closed trend line. This last week closed just below it, but now this current week is having a monster move back into the trend line. I think this is probably going to be a dead cat bounce, and I mean, once we see these trend lines lost, they are really difficult to maintain until perhaps dropping back here. But we'll see. What do you think? Are you thinking that this was an anomaly and that's going to continue to hold this and trend up to new all-time highs? Or do you think it will be dead cat, come back down here?
I think new all-time highs.
New all-time highs? And again, this is the phase 4.5, because here's the phase 4 line here. We're watching the price go completely vertical and rogue off of that phase line. But that weekly close was very interesting to me. One thing I wanted to show on this particular chart is I have just 2 simple moving averages. I got the 21 EMA and the 8 EMA. And if I zoom in, we can see that the 21 is still holding as support, and now the 8 EMA is holding as resistance. The price is going to get squeezed until one of these gives out. So we're talking about above 62.6 or below 57.1. And we would need to see 1 or 2 weeks closing below 57.1 to really consider it lost. Typically in the bull markets, that yellow moving averages holds on this time frame. I can go back to the 2015, 2017 bear run, and we can see anytime the price got anywhere near the yellow moving average, that was a buy. That was a strong buy. And as soon as the price started closing below the yellow moving average, bull market was over. Same holds true even going back as far as when the moving average first formed. It was relevant as soon as it first formed. Here are two gigantic drops in 2013, close to the yellow moving average, a nice bounce off the yellow moving average, another bounce off the yellow moving average, propelled it to new highs. As soon as we saw 1, 2, 3, 4 closes below, silent night. So we do have to be careful with, if this moving average is lost and we drop to those lows back to the channel that Tone and I were just talking about, into the 47K, that opens up the possibility to end this bull run. I don't think that's what's going to happen. But what we do not want to see at all is the orange moving average, hold on, crossed below, because with a high there, we don't have too many examples to draw from. Being said, every single time that has happened in the bull runs, it's ended the bull market. And look right here in this summer consolidation in 2023, we had 1, 2, 3 closes below the yellow moving average, and look how close the orange came to crossing below. If this candle right here in October did not do what it did, we would have seen Bitcoin turning around quite bearishly. So this is just a chart kind of showing my projection into the next high. And if it happens to hold this parabolic curve to the top, I would be looking at 180K in August of 2025. If you look here, I've timed, now what's shaded in blue are moves off of the bear market lows to the all-time high. This was a very, very fast cycle. It topped in 366 days. The last 2 cycles, the top came 509 days after. And in 2020, the top came 535 days. So I believe I probably just kind of took a random average of 520 days. So this is purely speculative, just based on patterns, cycles, assuming we're not going to have a massive breakdown down to this bottom into the 35Ks. We could be looking at 180K by this time next year. How does that sound?
That sounds great.
I'll take that. I'll take that any day, all day. Okay, real quick, I just want to show this. Now these are Fibonacci. All of these are Fibonacci numbers. We've got 8 for the orange, 21 for the yellow, 55 for the green, 89 for the light blue, 144 for the dark blue. There's a 233 in here, but I don't have it highlighted. We can look back at all the cycles and we can see that particularly in 2021, it was this moving average where the price dropped to at 50K that held the 28K lows right here. And then we had a strong bounce back up to 69K. Once this moving average, which is the 144, I'm on the 3-day chart. This is a really clean look on the 3-day chart. This might seem random, but the pattern is very, very clear. Once this moving average became resistance, and then it was confirmed that these above were resistance, the bull market was over. So what we do not want to see is a drop. Let's say Tone and I were talking about, let me see if I have that 233. Yeah. Okay. So here's what Tone and I were talking about. If this broadening wedge, if we get one more touch of the broadening wedge, it's going to tag this moving average as it's rising right around 45, 47,000. What we do not want at that point is to have this area up here in the 60K to flip to resistance, because once this key moving average is lost and this becomes resistance, the bull markets are over. I can go back to this run up to 14K. We saw a strong bounce right off of the blue moving average. This is 50K. Then we saw this moving average try to hold, and then we got COVID collapse. So, and back in 2017, here it was right here. This bounce off of $20,000 was massive. It was 100% bounce off of that moving average. However, this area could never be firmly established again as support. The yellow moving average and the green moving average, the 21 and the 55. Every single time the price jumped up there, it could not sustain closes above. Had it been able to, we would have seen Bitcoin significantly higher than $20,000. And then once this moving average, again, this is the 144 EMA, we can see right here, once it was confirmed as resistance and we started getting all of these closes below it, it was silent night. And then losing the 233 was capitulation. And so I think on one stream, I might do a little bit more deeper discussion on the relevance of these Fibonacci EMAs, because it's not just with Bitcoin, it's respected in every single asset in traditional markets. So what I would prefer to see is a little bit more consolidation. We do not want this cross to dig in too deeply right here at 61K. We need to see closes above 61K, and then here's Tone and I's 62 to 64K right here, even on the 3-day chart, closes above. And it would be good to not see any closes below 56K again. But this is a very, very clear look. And going on the monthly, we've got 17 days. We'll check in on the monthly in a week or two. Potential reversal candle. I would like to see this month closed above 58,300. Back here in 2021, we got one close below, and we got two closes below, taking the price closer to the yellow, which means it'll close below here. We could see one more push down to 47K, which is the price range that Tone and I have mentioned a couple times now. However, we would want to see a strong reaction off of that, bringing the price back above 65K. And then one of the last things I wanted to talk about today, and then we can take a look at anything you want to, Tone, is Bitcoin versus REIT, okay, which is
Real estate REIT.
Yeah. Let me see if I can find that. I have it here. I know I have it. I've got to simplify this list. Where the hell is it? Let me see if I can just.
Yeah, you can type it in.
See if I get it. Okay. So, and I actually like looking at this one in reverse as well. I gotta find this ticker. Damn it. I had it. Oh, here it is. Here it is, right here. Okay. Let's look at it in reverse. This is real estate. This is real estate REIT, real estate versus Bitcoin, and off of the highs, it is down 99.999%. Okay, well, that's not true. It's risen. It's still 99.999%. The reason I want to bring this up really quick is because I'm seeing on Twitter a few accounts who have been big time real estate investors realize that having their money in real estate versus holding it in Bitcoin in the last decade has not been the wisest decision. And I've had discussions with my friend Ken, who is a real estate broker, that I believe that it's the real estate investors who are used to dealing in hundreds of thousands, if not millions of dollars denominations, that are probably going to be the next catalyst for a major move, like a major lift in the Bitcoin market cap. And I don't think that that's going to happen until the price is at 150,000 or maybe $250,000. And they're going to realize the what? Yeah. I didn't, I, they're used to dealing in 250K. They're gonna buy a house for $1 million. They're gonna put $250,000 down, and they're gonna hope it goes up 30%. So putting $250,000 into Bitcoin, when the potential return, when you actually start to understand this chart versus real estate, which has done nothing but capitulate to lower highs and lower lows and lower highs and lower lows, lower highs, lower lows. It's going to bring another level of trillions of dollars into the market cap. What timing that would be, I don't know. Do you have any thoughts or opinions on that, Tone?
A couple. So, to me, I mean, like that 99% is completely irrelevant. I think
Let's
the only relevant thing is at which point were people able to realistically buy a house with their Bitcoin, and that's that's where you would start measuring it from. So probably 2014, 2015, around that time. So there's a flip side to your argument. Yes, when Bitcoin is breaking 150,000, the real estate investors will take Bitcoin seriously. But I can guarantee you that Bitcoiners that have been sitting on Bitcoin between 5 and 10 years are
Yeah.
gonna diversify their Bitcoin into real estate. What else are Bitcoiners gonna diversify their Bitcoin with? It's not realistic to hold Bitcoin and only Bitcoin and living in your mom's basement. That's not gonna keep happening, right? So the only thing, and most Bitcoiners are not gonna buy the stock market, and they're not gonna buy gold. And what the hell are they gonna buy? So it'll be a fair trade where real estate investors are selling the apartments and houses for Bitcoin and holding the Bitcoin. So I don't think they're gonna drive the market to a significantly higher price point. I think it's gonna be a wash trade between the new wealthy Bitcoiners looking to buy real estate and the real estate people realizing that maybe they should sell real estate for Bitcoin.
Yeah, that's a good point. That's a fair point. And right here, I just adjusted this. Like, let's forget about the early stages where Bitcoin was insane. I even going back to January 2015, it's still down 99%. So let me read this. Let me read this
Yeah, but
tweet.
you're cherry picking the low again, right? You should try the high. You should try the. This is why I don't like looking at these charts in this direction, right? I always like looking at them in the opposite direction, where the numbers are getting bigger. I would put that at the low, at the 2013 top, basically. Nope, not that side. That side.
At this low.
Yeah,
Okay, still down 95%.
yeah.
But so check this out. This was a tweet. Captain Bitcoin. I just happened to find it. I just screenshotted it. in 2015, I sold 800 BTC to buy a house for my family. In 2018, I sold my house and bought back 50 BTC. People who think I'm crazy for selling my house, please know that my only regret is to have sold my Bitcoins. Investment in real estate is now garbage compared to Bitcoin. So we can debate whether that's true or not, right? But 800 Bitcoin at $60,000, $48 million, right? So I think that I think that real estate investors are going to start understanding this math. And yeah, they might not completely, they might only allocate 2% of what they're used to um, uh, investing in real estate. But even 2% of hundreds of trillions of dollars begins to rise the floor of the Bitcoin market cap. That's kind of the point I was making, is that soon enough, real estate investors are going to realize it's more liquid. It is, you have no maintenance fees, you have no tenants to worry about, you have no insurance to worry about, right? You have no lawsuits to worry about. You just buy and hold a little bit of Bitcoin. And to kind of hedge that against their real estate holdings, I don't think that they're going to pay attention until the price is a little bit higher. And it might not be until the next cycle, but it's coming. And there, I don't know the exact number. Do you know the number of how much money is invested in real estate around the world? Isn't it like,
It should be over a trillion.
no, it's hundreds of trillions. I want to say like 300
Well,
trillion.
yeah, land, yeah, it depends how you qualify, right? Because a lot of land is government land and stuff, right?
Yeah. So I think that's, let me see. I think that's about all that I had. Um, except let's take a look really quick at oil and natural gas. I'm seeing oil kind of uh, kind of act in maybe opposite of the stock market. Have you noticed that?
Yeah, it's 47 trillion according to Google, but I don't trust this anymore. Like I said, after me trying to figure out what the hell the debt to GDP is in Japan, and somebody in my chat group wanted to use ChatGPT to get the number, and ChatGPT is saying, well, Japan's debt to GDP is you just take 9 trillion in public debt and divide it by 4 trillion in GDP, and bam, comes out 265% debt to GDP. And then you tell ChatGPT, if you divide 9.2 by 4.2, you don't get 2.6, you get 2.18. And ChatGPT is like, oh, you're right. I couldn't do this division before, but clearly I have no idea how to divide 9 by 4. And ChatGPT doesn't know how Japan's debt to GDP gets calculated. This is
So
why this is why AI is useless.
so that 47 trillion, is that in the US or global? Because that sounds low to me.
US.
Yeah,
It's
US.
US.
Yeah. I'm
That's the
talking
total value of US real estate, right? That's
yeah.
yeah. No,
Okay.
no, these are astronomical numbers.
Yeah.
Globally it's four almost 400 trillion.
Okay. That's what I thought. That's what I thought. And so what I'm saying, I'm not suggesting all high level real estate investors are just going to, abandon their properties. I think that it's going to, once they learn more about it, and now that we have access to the ETFs, I think that they're going to realize that it's going to make sense to take 2%, like 2% of $300 trillion has the potential to rise the floor of the market cap pretty significantly over time, you know? So real quick, I was just looking at oil. It's 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 not doing much. It's just been in this massive triangle since 2023.
Yeah, I think it's staying there.
Yeah.
I mean, eventually the Middle East is gonna go nuts. Eventually, Iran and Israel are gonna seriously go at it, and we'll see what happens to oil prices. I think they're gonna spike.
So just from a timing standpoint, this is suggesting volatility. I like to do this. I like to just draw an ellipse um, towards the end of these. So starting in, let's say, November, the end of this year. Let's just say after the election. After the election is when I would begin into mid to late February, is because I can't, like, this is as conservative as I can draw the bottom. And we've got three nice touches. We've got three nice touches here. So these are valid trend lines until we get new information. So stretching this out, this suggests some kind of resolution outside of this in early 2025. It will probably be post-election. Now, as oil is dropping, we're seeing natural gas kind of work inverse. Do you consider oil and natural gas to be inversely correlated, or no?
No,
Okay,
no, I consider them correlated.
correlated. Okay. So natural gas really isn't in the same type of pattern. It's just, I mean, I kind of have like this median right here. It's just kind of like lingering, doing much of nothing. But this is potentially a bullish pattern to suggest natural gas is going to go higher. I did notice with the S&P that let me put this on weekly. The S&P is doing kind of what Bitcoin is doing, which is, oh, this is good. I like this. It's actually, well, clearly it's more bullish. Clearly it's more bullish than Bitcoin. We have seen. So do you see this? Do you see this area where the price seems to have magically reversed right here? And we got this massive space between the yellow 21 and the 55. I can almost guarantee. I can almost so the next moving average between the 55 and the 21 is, it will be the 34 EMA, which I have delineated right here on my third one. I can almost guarantee that is going to catch this right here. Let's just see. Right there. Right? So it caught the 34 EMA, bounced strong to close back above the 21. And now in 2 days, we could see a second close above the 21 and also above the short-term EMA. So this still is possibly going to be a dead cat bounce, maybe up to 5,500 and roll over one more time. Because remember, I said in September is when I expect the stock market to put in an election high. So that could possibly be something like this. We can continue to see a little bit of a rise. Hold on, I gotta, it's flat. A little bit of a rise into this resistance into September, roll over into the election. I don't know where it will drop to. And then here we are, early November. Let's just say it gets a big crash, a scary crash, like down here. That's a buy. 5K, in my opinion, if this is what we see. Anything post-election, early, any kind of drop into the election has the potential to be a strong buy. You just have to manage a stop and have like a price range in mind of where you want to get out. So Tone, this would mimic kind of what we were talking about with Bitcoin making one more move up and then having a crash into the election. This is what this is what the S&P could possibly look like. I'm not anticipating that. This currently is looking very strong,
I
um,
agree.
and quite bullish. So we'll see. We'll see what happens with with um, with the S&P index coming into the election, and the monthly has 16 days left. Had a drop. This I love when I see a test of this. Like anytime the short-term moving average gets a test on the high time frames, it has the potential to reset the market. We can see that happening. We can see that happening here in September of 2020 after the drop. Being said, losing 5,000 has the potential to bring the stock market back down. So, um, what are your thoughts as to what to consider from the S&P from here on until November 1st? What are you anticipating?
I'm still more bullish than bearish, but anything can happen. I'm leaning slightly bullish here. I would be very bullish if we break all-time highs. So that's the current monthly candle. I would need follow through. If next candle is above, this candle's high, then I'm gonna be bullish and that's it.
Okay, so let's just take a look at S&P real quick on Consensio, and then maybe we can wrap it up. So I'm gonna put Consensio on weekly. I actually have started to like the 4-day chart in traditional markets as well for different reasons. But Consensio on weekly is showing us we had a bit of a bear of a bear trap right here with this close below the long-term moving average. Well, actually, it didn't close; it dipped below. It actually closed back above the 21 EMA and has bounced right into the resistance of the intermediate term moving average. So if we begin to see weekly closes above 55, let's say 3 weekly closes back above 55, I think we could start looking towards all-time highs again. But there's nothing, there's nothing bearish in this particular chart that I see. And on the 4-day chart, it's similar. It's giving us similar information. Above 5,500, candles closing above there. Um, it's bullish. We probably will just see sideways into the election, and then maybe try for a breakout to new all-time highs. I guess the simple way to say it is I don't see anything in any of these charts that have me thinking that 2025 isn't going to see all-time highs in stock market indexes and in Bitcoin. What do you think?
I agree.
Okay. All right. Well, I think that's it for me, Tone. Anything specific you wanted to talk about or touch on?
One last thing, we briefly mentioned it, but uh, we never followed up on it. So most of the ETF stuff, I was just keeping an eye on that. So I pulled up the yield curve chart. This is the normal yield curve. This is what a yield curve is supposed to look like. You have the 1 month interest rate lower than the 6 month, lower than 1 month, 3 month, 6 month, 1 year, 2 year, 5 year, 10 year, 20 year, 30 year, right? So this is a normal yield curve. You have
Tone,
the
we don't see your screen, or maybe we do,
you
but
don't?
hold on, let me see.
No, you do.
Okay.
No, it's okay. No, it's good.
Yeah, I see it. You're right. Right.
All right. And this is your normal yield curve where the shorter the time horizon, the lower the rate. It's a standard yield curve. You see the 3 years at 3%, and the 30 year. I mean, the main ones are 30 year, 10 year, 1 year, and then the short term, say 3 months. Okay, here's the yield curve today, which is still messy. So right here, this yield curve at the lows was actually still good, right? You can see that it's a 1 month, then 3, then 6, then 1 year, 2 year, 5 year, 10 year, 20, 30. It's still in the right order. This is 2021. In 2021, the yield curve is just fine. Now, if we're over here, now the yield curve is a bit twisted. The 30 year is still at the top, so is the 20, but the 10 year is kind of in the middle, and then you have the 1 month, 3 month, 6 month in the middle, and then these are kind of down there. So maybe I could, and right now, here's where we are. I like it this way a little bit better. There we go. Okay. And here's where we are right now. And right now we have the 3 month has the highest interest rate. So this is a completely still inverse yield curve. The 3 month and the 1 month have the highest. It's the same thing, right? 140, 547, 548. And the 6 month is right there with them.
Mhm.
And then the 30 year and the 10 year are about the same, 451 versus 436, right? So 1 full point lower. So we're only going to look at the 10, the 30, and then the 1 year is smack in the middle. So the yield curve is still inverted. And the
Yeah.
yield curve can stay inverted for a long time. It's been inverted for a long time. And it's still inverted. So the question is, does the inverted yield curve predict recessions, or does the yield curve cause the recessions? I believe the yield curve causes the recession. But if the yield curve stays inverted for a decade, your recession ain't coming.
Right. Right. Let me I want to ask you something. Let me share my screen real quick. Because uh you gotta let me pop back on there. What is this? So this is the 10-year, this is the 10-year and 2-year right here. And so this is what Tone is talking about. Um it has been basically flat and inverted since July 2022. Here we are 2 years later, right? Now this is actually a bullish moving average structure. It's trying to revert, but it's not, it's still just doing this. But Tone, what are these spikes right here? Can you see those wicks? What is that?
Yeah, it could be data error. US 10Y. Well, can you
Well,
use a different?
This is 10Y versus 2-year. Here's the
Can you
10Y.
use a different ticker? Can you use
Yeah, let me just look at the 10-year. That's normal.
see, I don't use those. I use well, which ones do you use? No, I do use those actually.
Yeah, this is
I US, no, I use DGS.
DGS. What? I don't
Uh,
see that.
Hold on, DGS 10. Try that.
Okay, there you go. Let's take a look at that.
So try to do the same thing. DGS 10 minus the other one, whatever you did in the thing. Um, so DGS 2 probably.
Let's see.
Think you put divide. Didn't you have minus before?
I think I did divide. I think, let's see. Is this correct? Yeah, I think this is correct.
Okay.
So,
You can set it to candles if you like.
well, this one won't let me.
Right. Okay. I mean, I would ignore those spikes.
Yeah, I was just looking at that and it didn't make any sense. It has to
Right.
be some kind of a data error. So
Right.
basically we need to see this rising up above, I would say, this area over here, uh, above there, to consider the curve completely reverted. Would you agree with that? To
Uh,
have this rise above here, and then maybe this reverts.
Wait, what are you dividing? You're dividing
The 10
the
year by the
10
2
year by the 2 year, and you're getting sub 1. Uh,
Well, because
yeah.
yeah,
Yeah, they're super close to each other right now.
yeah, they're really, really close. If we just look at them, if we just look at them
Yeah.
as is, it's the 2 year is at 3.954, the 10 year is at 3.83. They're almost in parity.
Yeah.
The 2 year is still higher than the 10 year. Now, one thing I have mentioned on prior streams, I do have this. Okay, I have this set up. Is these? I got to put this on monthly. Tops in the 2 year, significant tops in the 2 year after being inverted. Um, it's nasty. It's not good. We this is 2000. Do I have anything marked prior to that? No. But this is looking like a rounded top right here, but it's still not really confirming any kind of a top until maybe these swing lows right here from March 2023 are taken out, which has been close. Can we maybe consider that the 2 year has topped? And that's when we would see the yield curve invert and start potentially talking about
Right,
recession and
but
stock
Mark,
market
see,
drop.
this is just the chart of the 2 year yield, right?
Yeah, just the 2 year. Yeah.
Right, so this is where I have a slight problem with this chart. You are equating that it's the turn of the 2 year that causes the crash in the market. And I'm saying it's the other way around. The market crashes and in turn forces a crash in interest rates.
Okay.
So if
I
the
like that.
market doesn't crash, the 2 year won't go down.
Right. Do you think that the yield curve will revert if the Federal Reserve cuts rates by a quarter point?
No,
No.
the yield curve will do what it does, right? Because it's actually kind of still crazy that the short term, I mean, this is not the reality, right? Like the yield curve, it's hard to get reality out of it. Like when you walk into a bank, right? You're not gonna get a 6 month CD at a way higher interest rate than a 30-year CD, right? Like it's like the yield curve still does not reflect the reality at the bank.
Right. And again, here's the 10 year. We're just looking straight at the 10 year. It's not showing any clear sign of any kind of top or rolling over. It's just kind of staying right in the middle of this range that it's been in for basically 2 years. So I do agree with you. Like, I don't see anything in here that is alarming, signaling, hey, be careful, watch out for a stock market crash. It's looking fine for now. But one other thing I wanted to say is I did read a tweet earlier this morning, and it is something I've been thinking a lot about. I believe the number that they mentioned was 30 trillion. I'd have to do some research, but they said $30 trillion. Currently, $30 trillion is held up in money markets, um, waiting to be put into action. And I don't know what those money market rates are. I think they're 5 point something maybe. Once the Federal Reserve begins to cut rates and those begin to drop, that is going to unlock a lot of liquidity that has just been sitting. They've been sitting in those money markets for several years
Yeah,
because
but Mark, but the Federal Reserve has no reason to cut rates. I mean, they're gonna cut this rate one time, just symbolically, so that people will, get off Jerome Powell's ass and he'll help the election a bit, and inflation has eased. I mean, like at best, he's gonna cut them down to 4% and that's it, right? Like they're not going much lower. But if the stock market crashes, then he's gonna lower the rate. But if the stock market crashes and he's lowering the rate, and the rate is being lowered at these money market funds, why would they exit the money market funds into a crashing stock market? So they're stuck in these money, like people that are holding fixed income assets always have a reason to never get out and buy the stock market, right? Unless the interest rates are low and the stock market is booming. But that environment is almost non-existent. That environment is only existent when the Fed is late at raising interest rates. When the stock market is booming and the Fed is scared that the economy is fragile, and then those that realize it quickly, they convert their fixed income assets into the speculative stock market. Because if you don't do it early enough, now you have an excuse not to do it. Oh, the stock market is risky, but now I'm getting my 4 or 5%, right? And
Right.
then the stock market crashes, you lose your 4 or 5%, it goes down to 2%, but now you're scared to enter the stock market because it's crashed.
Right. Well, also, I think there was a metric. I will do some research on this, stating that that $30 trillion was several factors higher than what is normal. Meaning that that's abnormally high to have that much money sitting in money markets alone. And my only point is, whenever the conditions are right, and I don't know when that is timing wise, once it makes more sense to get out of that safe environment into a little bit more risky environment, it is going to have a positive impact on Bitcoin. That might be after a stock market dip or crash. It's
Sure,
possible.
sure, but again, like whenever someone uses these absolute numbers, like it's an unprecedented amount of money sitting in money markets. Okay, but how much money did the government print during the pandemic, right? It was an unprecedented amount of trillions of dollars in printing and deficits, right? So obviously there's going to be more money slushing around the system, and the stock market is at an all-time high, right? At the same time. And Bitcoin is at an all-time high or close to it, and gold is at an all-time high, and real estate in many parts of the world is at an all-time high. So everything is at a new all-time high, right? Because the value of money is crashing against all other assets, including the amount of money held in fixed income.
Yeah, that's a really good point. I agree with that. So let's take a real quick look at Bitcoin, see what's going on. Today's a red candle day. I'll be watching this close in 6 hours. I if we're bullish, I don't want to see too many candles closing below $59,000. And currently, as long as long as the price, as long as the price, I'm going to zoom in quite a bit, is above the low of this candle, which is at 58,855, we will have MRI count trying to reset back to green one, meaning potentially, but the problem is we would not get an MRI buy until the price is back up here. So even if this holds, this is still suggesting sideways for a while longer. But once this is lost and we start seeing a couple closes, it is going to open up. This band is going to continue to rise on the closes. But once we see this lost, it begins to open up this area here between, let's just call it the swing lows of 57.7 down to the bottom band at 55, which hopefully would still be a higher low. But if not, we have to be a little bit more defensive. Real quick before we go, I did want to show this. So this is the Bollinger Band volatility indicator. Basically, when it's down on the bottom here, all that it's telling us is that the bands are tight. And what is amazing about this is, even with these moves here, we still have not seen any kind of significant move outside of the bands. The wicks have closed the price back inside of the bands, and we're still right in the middle of them. So this is creating a tube with the Bollinger Bands. And what happens when we get a tube is, let me see if I can find an example of one. Basically, the more that this elongates like this, it just continues to build the volatility. And then once the price is trending outside of the bands, so the bottom band is currently reading at 54.4. The top band is reading at 71. Once the price begins to trend significantly outside of these bands, with this volatility reading being so low, it is going to expand the move. But I've just found it interesting that with all of this price action, basically going back to March at the last all-time high, on this 4-day chart, we have not seen the price navigate outside of the confines of these Bollinger Bands yet, which is why we've just been seeing all of this sideways consolidation. And this chart on this look is agreeing with everything else that we've said about 10 times until the price is above the middle Bollinger Band, which is currently pink on this chart, which is 62.6. We can't really be bullish. However, there's a hidden bullish sign forming right now. And I will remove. So if we can project these moving averages, it's looking like the yellow is going to eventually cross above the middle Bollinger Band. And we can look back and see, like after a low right here. This is a great example. This is exactly what we want to see. This is the summer consolidation of 2023. And we can see the price was doing the exact same thing. It was swimming from this period here. Let's call it this high of 31K. It was staying between these bands for months on end. And right here was the hidden bullish signal in September 2023. We got the 21 EMA crossing back above the 18 SMA, and it was resistance, it was resistance, it was resistance. And once that happened, it began to try to flip us to support. We are about to get that signal right now. Although it's probably a few candles away. And if the price makes a downturn, this yellow moving average is going to track it. Point being, if I see on the next stream or two, this moving average crossed above the middle, I'm going to start putting a higher probability on that 63 to 65K range. And then we would start looking up here for a breakout. So right now, it's just doing so. It's very, very similar still to summer 2023, which we've been looking at for months on end. So let's just break it down into simple terms. Nothing too bullish happens until the price is above 63 to 64,000. And other than that, we should expect sideways, maybe even dips back down to the mid 50Ks. Do you agree with that? Call it a day?
Yeah.
Okay. All right, perfect, Tom.
All right, time to wrap it up. All right, guys, thank you so much for watching. We've gone just under 2 hours. How do I? You want to come off screen share there, Mark?
Yeah.
I'll close this out. Perfect. All right, guys. Thank you all for watching. We'll try to do another show with Mark next week. The Twitter Spaces, I got my days confused. It's gonna happen on Friday because tomorrow is another travel day for me. We'll bring you the show early in the morning tomorrow, probably a little earlier than usual, and after that I'll be off. Up to the cabin. All right, Mark.
Awesome.
Thanks for joining. Hopefully see you soon.
All right.
Later, man.
Later.
Oh, show with Socrates tomorrow evening US time. I'm gonna try to join that when Matt does it with Socrates. Bye, guys.
Excellent. Excellent.